cut coming in, though there is some amount of recovery from the lowest point, but still overall profit taking. ITC is doing well today with 2% gains, HUL 1.5%, M&M. So agri and FMCG kind of themes are relatively better off today. But let's talk about what's happening in the rural India, and a lot of hopes are being pinned that rural actually would revive or pull India out of slowdown, and rural recovery will be much faster and it's in better shape. Mr. Sachchidanand Shukla, the group economist at M&M, is joining us now to talk more about that. Mr. Shukla, good afternoon. Thank you very much for your time. Let's talk about the hypothesis which you're making, and also how you're analyzing the progress of monsoon, and collectively, be it monsoon, better monsoon this time round, the government steps towards the agri side or the rural side, and of course the inherent strength, because that was the unaffected part of the economy. Together, how potent is this combination in your view on growth?
Thank you, Ajay. I think when we look at the whole rural piece, we need to look at the story in terms of agriculture or farming, and a big component which is non-farming, because roughly 50 to 55% of the incomes are related to non-farm incomes. So when I see the rural space, I think agriculture or farming is going to lead the revival. I wouldn't say it is the biggest game in town, but this is certainly a big game in town at a time when we are clutching at straws right now, looking at the global situation as well as the evolving situation in India. And on a relative basis, I think the rural space is in a better position, better space. If you look at what has happened, I'll just walk you through a little bit in the past, take you back, say about 6 months. What really happened was, if you look at agriculture growth, it was about 4% in FY20. And agriculture incomes actually started to recover in second half of FY20 because of a sharp pickup in food prices. And if you look at the agri GVA deflator, it has averaged about 8.3% in the second half, which is quite significant. This basically tells us that there was a reversal in deflationary phase in food prices, which began from September 19 last year. Coming back to the present, what has happened is there has been a record winter harvest, right? The Rabi harvest has been a record. The procurement from the government side has again been a record. About 386 lakh tons of produce has been procured from the farmers. And if you look at the government spending, which has really been very supportive, central government spending is growing at about 20% plus. And I think if I go back 10 years, I saw this around post GFC, right? What the government tried to do to really take the economy back on normalcy. If I look at the last 3 quarters, central government spending really has accounted for nearly 40% of the GDP in the last 3 quarters. And the center's rural spending growth has been growing faster than overall government spending at, say, 26% in F20. The other important component is the state governments, and we have data for about 16 odd states. There, the spending on the rural part has been growing at 20% plus. So what I'm saying is, if you look at the deflationary phase is over from the second half itself. The government has been procuring food grains. There is some kind of pricing power with them, with the farmers. And if you look at just the post-lockdown phase now, the total funds flowing into the rural economy is now about 1.5 lakh crores. So what they've done is they've procured food, wheat as well as paddy, which is about close to 1 lakh crore. And then there are other grains such as, say, chana, tur, mustard, etc. So if I just use the MSP as a proxy, about 1,17,000 crore there, about 16,000 crore has been transferred under PM Kisan scheme. And Narega also, if I were to add, the non-farm bit, another 17,000 crores. So roughly 1.5 lakh crores has been flowing into the rural side just post the lockdown period. And looking forward, the forecast of monsoon is normal. 102% is what the IMD says. So far, we've seen 22% above normal planting of the Kharif crops. And we are also having 34% roughly reservoir levels higher than the last 10-year averages. Uh, I think all of this really calls for a rural-led recovery. I'm not really saying that it is booming, but it is definitely one of the best spaces to be in on a relative as well as absolute perspective.
Right. Right. Mr. Shukla, what are your thoughts on overall country output coming back to pre-COVID levels? The partial unlocking of the economy which has happened now, and if we assume, which is largely the kind of narrative which is going on, that first half of the calendar, next calendar 2021, we may actually have a vaccine, worldwide. By when do you see economy's output, not just GDP growth, coming back to pre-COVID levels? What are your thoughts on the hypothesis?
I think it's fairly tricky, Ajay, as we see the situation. If you look at what is happening globally, US, West and South, you're seeing record number of cases again, the second wave, as they call it. In India, you're seeing a peculiar scenario where on an everyday basis, we are seeing new highs in terms of the rate of infections. We're actually seeing certain state governments come and say that we are extending the lockdowns by another 15 days or so. And I think the situation is really fairly evolving. Even with the hypothesis or assumption of some kind of a vaccine or some cure coming up over the next 6 months, I think it will still take us at least a year to be able to come back to the last fiscal numbers in terms of output. And even there, it will be a very graded kind of a reversal of the situation in terms of coming back to normalcy. So like I said, the rural or the agri parts, you will see the output really reaching more or less the same levels as last year fairly quickly. We have seen the Rabi output, the Kharif output also is likely to be a record of sorts. And therefore, the rural parts output will be where we were last year. But when it comes to manufacturing, we are seeing that the recovery being very, very graded. And as I said, each state is taking a call as to how they're going to reverse or normalize the reopening. And therefore, on a manufacturing basis, if I look at various sectors, we are back to 70, 80%, 50 to 70%, I would say, if I look at various sectors. Services will still take a lot of time. So when I aggregate the agriculture, manufacturing and services bit, I think it will be at least 12 months time before we even think of reaching the aggregate output levels as last year. So I think we can probably wait for a while before we arrive at that judgment. Let's take it sector by sector. I think agriculture and rural is likely to lead it. Manufacturing follows, and then we'll probably get better signals around the festival season. And then we can also start looking at some of these services sectors. So I would probably wait before I can really take a call whether we will, in a say year's time, be at the same level of output as last year. So I'm not really talking about GDP, but just the physical output and the economic activity. I think we'll have to take it temporally and spatially as we go forward.
One last question. As far as the government measures are concerned, there is again talk building that one more stimulus as we go forward perhaps is in there on the offering, and this time something to do with direct consumption led. Do you think that will make a difference? How much would it make a difference, and how much can we afford in the current circumstances, in your view, in terms of further stimulus?
Look at what the government has already done. I mean, of the 20 trillion, just about 2.3 trillion is going to be actual incremental spending. The entire effort has been more on relief than a stimulus. If you look at the global evidence, the likes of US, UK, etc., even after pumping in so much of resources, monetary as well as fiscal on revival, uh, they're still talking about the next phase of the stimulus, which is more likely on focusing on demand. If you look at what we have done, like I said, of the 20 trillion, just about 2.3 trillion is actually incremental spend. But that was largely on relief measures. Going forward, I think as we unlock the economy in phases, and we are seeing some of the bigger states like Maharashtra, for example, the chief minister has said that while there will be incremental unlocking, uh, the point is they're still not talking about a complete unlock as we speak. And therefore, I think the biggest stimulus to the economy will be the unlocking of activities. I think that is the biggest stimulus that we can give the economy. But having said that, given the fact that each state will take a call and maybe it is a graded 15-day kind of a thing wherein we see whether the chief ministers of respective states really take it forward. But having said that, I think we will still need about 1% of GDP kind of a stimulus targeted at sectors that are really suffering. And this has to be a pure demand stimulus. So like I said, I think I would put it this way. The biggest stimulus will be the unlocking of the economy or the states. And thereafter, once we have sort of gone into that unlocking, we will need about 1% of GDP purely as a demand stimulus. And that too has to be targeted at specific sectors which have borne the brunt of this lockdown. So I think probably I will also be looking at the sequencing of the unlocking as well as how the stimulus is likely to be unfolded in the economy. I think I would also look at that.
Right. All right, Mr. Shukla, we'll let you go on that one. Thanks so much. Always wonderful to chat macros and data points and joining the dots to make a bigger picture with you. Thanks very much for your time. That was Sachchidanand Shukla, Group Economist of the Mahindra & Mahindra Group.